Now, fintech startups have enormous potential to help the world's 3 billion financially underserved people weather the COVID-19 crisis and build resilience for the future. But to grow and fulfill their missions, fintechs should turn away from the common grow at all cost mentality and focus on winning from within by providing real value to their users. Two inclusive fintech startups, Pintek in Indonesia and Advance in the Philippines, are applying strategies to retain and engage their users and ultimately help them build financial resilience. Joining these two fintech startups alongside non-profit impact investor Accion, which works with fintech startups around the world to discuss how they are innovating to meet new needs and what they need to succeed and grow in these uncertain times. Please welcome Tommy Yuwono, Pintek, Jaime de Los Angeles, Advance, and Michael Schlein, Accion. Welcome all of them, please.
Hello, and thank you all for joining today. My name is Michael Schlein, and I'm excited to be part of the Singapore FinTech Festival alongside with my two distinguished panelists here today. I serve as the president and CEO of Accion, which is a global nonprofit dedicated to building a financially inclusive world. We find, fund, and grow companies creating new ways of meeting the financial needs of 3 billion people who are ignored or poorly served by the global financial system. We are living in a time of extraordinary innovation that is changing all of our lives, but that innovation is particularly relevant to how we can bring basic financial tools to those who need them most. When working with the poor, it used to be that distances were seen to be insurmountable, but today there's no distance that's insurmountable. It used to be that transaction sizes were seen as too small to be commercially viable, and now, of course, there's no such thing. And it used to be very difficult to know your client, but today, with data and data analytics, we can know our clients and understand their needs wherever they may live. And early stage fintechs are uniquely positioned to leverage this innovation. They're nimble, they're flexible, and of course, they're digital. Accion also works with large existing institutions, and I'll just say that changing a big company is very hard. To give you a sense of some of the innovation we're seeing, Terra Magna is using satellite imagery in Brazil to see small farms who have been ignored by large banks. They use those images to assess collateral and figure out what a farmer needs to grow and thrive. Field Intelligence uses artificial intelligence and data analytics in Nigeria and Kenya to help community pharmacies optimize their inventories and ensure their customers have the medications they need. Credit Mantri is using alternative data sources to help consumers in India who have been invisible to the financial system and all of a sudden make them visible, helping them get access to credit for the first time. And Toffee Insurance has successfully reached India's uninsured by offering bite-sized policies covering the risks that are most relevant to consumers like dengue fever or malaria or bicycle damage. Now today, I'm very excited to be joined by two great innovators who themselves are using new technology to reach people who otherwise would be ignored. Jaime de Los Angeles is the CEO of Advance, a company that helps workers in the Philippines gain early access to their wages. And Tommy Yuwono is the co-founder and director of Pintek, a company that is helping students in Indonesia get a quality education. Jaime and Tommy, I know we're going to talk about the pandemic in just a moment, but before we get into that, let's take a step back and maybe I can ask each of you to talk about your own journey and the problem that your companies were trying to solve. Let me start with you, Jaime.
Hi, Michael. Thanks for having me on the panel, and Tommy, thanks for joining as well. So yeah, I'm the CEO and co-founder of Advance, and what we do is we provide on-demand access to credit to thousands of employees across the country. So we're the first wage access platform in the Philippines, and we designed this really to address the needs of millions of Filipino employees who just have a very difficult time bridging their daily needs. And this is the purpose of Advance. We want to provide that convenience and financial dignity to, again, millions of underserved employees who we feel should gain better access to credit.
And Tommy, what problem are you trying to solve?
Yeah, so thanks, Michael. So yeah, I think Pintek is focused on to giving an access for financial access for education sector, meaning actually also not only for parents and students, but also the financial problems that face by the education institutions and all the education suppliers, like all the company and supplier related with educations. Basically, in Indonesia, we are facing the bonus demographics, but the education's level is kind of like need to have some helps. So, and the financial access is one of the key problems. So that's what we kind of like trying to solve.
And Tommy, just give me a little bit of your background. How did you get here?
Yeah, so I think it's a great journey basically. So I'm actually local Indonesian, so I grew up here in Indonesia, so I know exactly what's the problems of all Indonesian people regarding to education. Me myself is facing the same problems because when I want to go to the college, I am facing the financial problem as well. So it's really related with my experience as well, and I really understand that many people having same problems like me. But after graduating from universities, I'm joining investment banking and then also starting a fintech startup in a payment. Then we try to solve payment problems in education sectors, meaning all the schools when they need to receiving and collecting the cash from the students and parents. They still also having that kind of like problems, all the collections. They don't have the system to do the collections. But when I speaking with them, I'm understand that not only the collection problem, but it's actually also the financial problems. Like they don't have the financial access for the students and parents, and also for the education institution itself. So I mean, I'm remember my problems back then when I'm going to college. Then that's why I'm with Johan, my partners, start to doing this.
And how about you, Jaime? How did you get here?
No, so I actually started 16 years of my professional life in corporate, and I had moved back to the Philippines at the start of 2010. And I was working and living abroad. And coming back to an emerging market, there was just definitely a lot of eye-opening experiences, and I really noticed that there were gaps in terms of how traditional financial institutions responded to the needs of Filipinos. And I guess having a taste for some of the convenience that we experienced abroad, it was just kind of like an internal obligation of mine to figure out how I could deepen our impact in financial inclusion. I think that's really what drove me to building and starting a fintech company. And yeah, I think just realizing how much there still needs there's still room for improvement here, and also knowing that the vast majority of employees who obviously work hard but still are forced to live paycheck to paycheck don't have that many options. And I think for us it was important to think about ways where we could provide impact, and after, again, years of corporate, I kind of took the leap and started to build out Advance.
And just a quick reminder for our audience, if you have questions, please submit them at the chat function. And I'm going to do some of the Q&A right now, and then towards the end, we'll open it up. But let's talk a bit about the pandemic. Obviously, the pandemic has changed the world and changed the landscape we're operating in. As a bit of context, in human history, over the last few decades, we have seen extraordinary progress, the greatest progress, in reducing poverty. And in the last decade, we've seen enormous progress on expanding financial inclusion. And now, because of the pandemic, for the first time in our lifetimes, those trends are reversing, and all of that progress is at great risk. The World Bank has estimated that the pandemic may push 150 million people back into poverty in just the next year. And small businesses have taken it very, very hard. Up to a third of micro and small businesses have been forced to close, and far more than that are dealing with enormous declines. In some ways, early stage fintechs are set up well to respond to the pandemic in that they are digital, they're nimble, and they can pivot to the changing market. Let me ask each of you about the pandemic's impact, first on your clients, but then on your company. Let me start with you, Jaime.
I definitely think the pandemic has opened the eyes, of many businesses after seeing what their employees had to go through during a time filled with so much uncertainty. HR, in our business model, we're a B2B2C company, and we deal primarily with, the HR or the C level of the companies that we have partnered with. And I do believe that after this entire experience, which obviously is still ongoing, HR just seems a lot more open now to innovating benefit programs for their employees. And I feel that this includes thinking about the credit and financial needs, since not a lot of employers are, this isn't their core business, and they're not able to offer this type of assistance on a regular basis. And I think as we navigate through this pandemic, we're seeing different types of asks from our company partners to again better respond to the financial needs of what they're seeing their employees have been experiencing over the last few months.
Tommy?
Yeah. Yeah, so I think the impact of the coronavirus, the pandemic in Indonesia is quite crazy. Right? I mean, we are focusing on education. So in educations, all the school is shut down completely just after the pandemic. Like after the pandemic arrived in March in Indonesia, and after that, boom, like all the school is closed, all the non-formal is closed. So the impact is really hard. It's both in two sides actually. First, the urgency of the digital implementations is increasingly suddenly high. So every school looking for educations. Looking for the technology solutions, like all the systems, all the LMS, all the even they just starting to understand how to use Zoom, how to use all the digital platforms. But in the other aspect as well, because the pandemic also hit all the parents, so the purchasing level, the income level of the parents is decreasing quite significantly. So many schools are also suffering on that side, and also all the non-formal sector is also hitting hard because no one's kind of like prioritize that kind of like non-formal educations course, like all the English course when they need to come to the center and then meeting with the teachers. It's all closed, right? So it's hitting quite significantly on the education level because of the purchasing level is drastically drop, and people cannot come to the center or to the school itself. And like all the parents and all the students, they not really actually feel the confidence, feel the comfortable level of using these online learnings. Like all the teacher also still learning to use these online platforms, and the student is kind of like frustrating also to use this online platform. So the deliverables of the material of the education itself is not satisfying the students and the parents. So that's why they also not really kind of like okay to pay the same amount of money to use the online learnings. So this kind of like a really tricky situations, right? When we are as the financial company trying to give an access of financial access to the parent and to the student and to the schools, when they're also hitting hard by the pandemic itself, meaning all the revenue is going down, the income of the parent is going down. So it's a really tricky situation. That's why we need to also innovate our product, innovate our scoring product, and innovate how we see the whole landscape of the education from the supply and from the demand side.
So Tommy, just let me follow up on that. Are you when someone is struggling to repay, do you have to restructure, or also did you face like loan moratoria?
Yeah. So right now we do mostly on the restructurings, right? Because we know exactly education still a primary needs, and we see until now all the restructuring process also they kind of like submitting all the document and also following the schedule that we give, meaning the intentions of paying it's still there, right? They committed, it's not a fraud, or they kind of like trying to running away with the loans. So when we do the when we do the restructurings, it's all done well, I would say.
And just one more question for you, and I'll switch back. What's it been like? Have your employees all been working from home? How has that worked?
In Pintek or in Indonesia?
Yeah, in Pintek.
Okay, so in Pintek, yeah, everyone is working on home in kind of like first 3 months. Then after that, when the government's kind of like a bit relaxing, when we can come to the office, we do a kind of like split team. So every 1 week there's a team A, and another week is another team B. But it's kind of like still good progressing when we also already have all implemented all the systems, and of course also mentoring from our advisor and investor how to build a good working ecosystem on this kind of like remote working.
And Jaime, so now advance is not a loan product, right? It's an advance on their salary. So did you have to face loan moratoria?
We did. It actually happened twice here in the Philippines, where the government issued a loan moratorium, both during the, I guess, strictest lockdown, which was between March and June, and then again in August. So we had to adjust for that. And yeah, I mean, I think at the end we still had to be very mindful of our credit issuance to these borrowers, because it gets to be difficult for them. One advantage that we had, though, is that our product is a flexible line of credit. So if they didn't use their entire credit limit, and that, they would still have a portion to access over the months where a part of their credit is locked, because they're still repaying back the initial loan. But I did want to also touch on the kind of like the opportunities within the pandemic. So I know we were talking about how it affected us negatively, but at least here in the Philippines, and I would assume in other areas as well, there seems to have been quite a big shift in terms of mobile adoption. And I think as a tech company, it was important for us to see that, especially in a country that's so cash driven. So now, as we kind of look beyond the angles, we're trying to see what types of services we can also add onto our platform that would reduce the need for our users to have to go to an ATM and get cash and transact through brick and mortar. We want to be able to, again, enhance that journey so that everything is done online, and it keeps them both safe, and it also saves them a lot of time.
We're seeing that all around the world, where many places have had resistance to giving up cash, and now if you have the option to transact digitally, everyone is taking advantage of it. In addition to being expensive, cash is not safe these days, and face-to-face transactions are less safe. So we're seeing that, and I suspect that'll be a trend that stays long after the pandemic is gone. And also similarly, products like insurance that used to be very difficult to sell and make people understand. Now, I think everyone in the entire world understands what the value of insurance. So there are some, I hate to say silver linings, but there are some changes in behavior that are really accelerating, in part because of the pandemic. So our venture lab recently published a report, which I highly recommend, on the challenges that inclusive fintechs face to grow. And there's always great pressure to grow at all costs and bet the farm on customer acquisition. But customer acquisition alone can be costly. Acquiring a new customer is anywhere between 5 and 25 times more expensive than retaining an existing one. And there are many more sustainable pathways to growth, namely by building the value that clients get from the company. Specifically, the report talks about how to drive repeat usage, deepening engagement and therefore preventing churn, broadening product offerings to meet a wider range of client needs, and building a graduation pathway to help clients take advantage of new products to meet their evolving needs. And of course, both Advance and Pintek were featured in the report. So let me start with you first, Jaime. First of all, do you feel that pressure to grow at any cost? Do you put that pressure on yourself? Do investors put that on you? And do you feel pressure to prioritize client acquisition? And then second, I'll ask both questions at the same time. The case study on Advance talked about how you started working with payroll companies which were one level removed from the end users. And then it was hard to get through to the ultimate clients and explain the value of advance. How did that work, and how did you pivot to working with large employers directly?
Sure. I'll tackle the pressure question first. I think naturally it's just the nature of the beast, right? You have to be aggressive, especially as an early stage startup, and there are so many variables in play that you just have to keep kind of pushing. I think we do get some healthy motivation coming from the investor side, but internally as a team, we're also very, we're very set on building and growing our company to be the dominant, wage access platform here in the Philippines. As far as the second question, yeah, we built Advanced in 2019, and we were a 4-man team for about a year. So you're right in that our initial approach was to think about scale by working with payroll providers. And the reason we thought about this was because they have access to hundreds of companies and employee pools in the hundreds of thousands. And we thought if we could start activating, there was just a clearer path to where we wanted to eventually get to. We did realize that there was much less control in the end-to-end process. So at the end of 2018, around Q4, we collectively decided to start to focus on acquiring clients directly. And the reason for this is because despite being a tech company, there's such one key element that we needed to consider is the human component. And, it's building the relationships with these companies, understanding the needs of the middle B, in order to really strengthen our position within the companies that we work with. So if HR isn't on board, odds are they're not going to really extend your product to the employees openly. So we had to ensure that we understood what they were looking for, what the employees were looking for, and kind of customize to that. Obviously, the pandemic created some challenges in that, we couldn't be on site anymore. But I think just us building out a direct acquisition team has tremendously helped the business because number one, it reduces any reliance on these payroll partners. Even though they are a fantastic channel for us today, we can still operate if we lost both. At the same time, on the direct side, it allows us to really focus on, the businesses and the sectors that we think would be healthy for Advance. And now that we kind of understand which industries we do well in, it's our objective in 2021 to really gain a strong foothold there, so we can be, again, the top of mind service provider for, let's say, BPOs. And for us, that's really been important. I think it's impacted the business dramatically in that it's a lot more balanced now in terms of our users and our borrowers. So they're not just coming from just the payroll channels anymore. And from a control perspective, we have a lot more flexibility in terms of how we cascade our marketing initiatives and how we are able to engage with our clients. And so it's really I would say a healthy balance between how we pivoted from focusing directly on partnerships to now having a direct portfolio for our business model.
And does that mean through the direct channel that you may get fewer clients, but they're more engaged clients?
I would say yes, in that we are more focused on the types of clients that we go after. So in the with the payroll companies, there are instances where their general customers are SMEs, and especially now we want to focus on enterprise. And while the sales cycle can be longer for these accounts, we're talking about a workforce of upwards of 5,000-10,000 heads, and so that effort to close that massive account ends up being worthwhile because there's really a lot of opportunity to mine that. And despite having, let's say, a smaller number of key clients, the headcount can still be quite significant. And so I think that's where it outweighs sometimes having more in the portfolio, and you have just a long tail of maybe smaller volume clients versus having your typical top 10 that produce 90% of your revenues.
And just talk a little bit more about that pivot within the company of all of a sudden building out a direct acquisition channel and also trying to do it without going on site.
Yeah, no, it was challenging. So we we seized the opportunity when we learned, especially that when we realized that we just didn't want to be reliant on partnerships too much. So we quickly built the team, and we found some great success early in the year by being on site, setting up booths, being just more engaged, and offering live promos and stuff to the first 100 signups. That transition to virtual was challenging, not just because we didn't have the close contact with the end users. It was really because of the priority shift in a lot of these companies in general, right? I mean, some had no transition plan when we went on lockdown, and so a lot of our sales engagements were put on hold. A lot of the onboarding engagements were put on hold, and so we had to really dramatically adjust and figure out, how do we improve this experience and not just be like a 20-minute Zoom call for these employees. And so we had to really think about providing content, different types of programs to really entice users to explore, advance, and build out a little bit a more robust customer service team so that we could attend to questions that we anticipate would kind of flood in, especially since we weren't able to be on site on a more regular basis.
Gotcha. And Tommy, did you feel some of that pressure also? Do you feel that pressure to put client acquisition above all else?
So I think I totally agree with Jamie. Like the acquisition part is kind of like the nature of our nature of the startup, right? I mean, we are kind of like see the problems is there in our country, in our area that we specifically target into the other education sector. We see the many potential of there's many parents, many students, and many education institutions are facing these problems. And education loan and education I mean, if we can call it as education loan or student loan, is a really new product in Indonesia. So it's not like we are talking in a developed country where the student loan is a really common product, even it's maybe bigger than another loan product. In Indonesia itself, it's kind of like a new product. So when I remember when we start launching it and we do the first our focus group discussions, when we inviting all the parents and telling them about these student loans and what they're thinking is an education insurance. Because it's not really a common product here in Indonesia when we're talking loan for specifically for education. They kind of like believe the product of education loan is exist. So that's why I think our first mission is of course is educating the market itself. There is the education loan product, and when we tailor the product, focus to match with the requirement and also match with the risk of the education product itself. Because when you're thinking about education product, it's intangible, right? You cannot like take it back. When you're giving loans for a car, you can take it back, but for education, it's just a service. So it's kind of like a really new products, and we focus to start educating the market about this education loan product. We start to educating the education institution also the importance, and also and one of the key statement is the security of these products, because education itself is they don't want to make the parents or the students get a trouble by taking a loans, right? Because they want to also protect the student and the parents. So this is our kind of like our mission, to educating the education institution itself, educating the parent and the student that the product of education law is there and it's safe. So naturally, we kind of like want to growing our user by acquiring and educating them.
Now, so before that, you had a student loan product. Parents had to largely just pay through savings and just pay in cash?
Yeah. So in the K-12 sectors, they need to pay in cash. There's kind of like an entrance fee, right? So when you send your students in example to the middle high school or the senior high school, they need to pay something like some lump sum amount in the first times, and in cash in advance. So they need to saving up. And for the tuition fee, they kind of like can pay monthly payments on the K-12 sectors. But on the tertiary educations, they need to saving up, of course, to pay the entrance fee, and then they also need to pay also the another tuition fee for every semester, and they need to saving up for that.
Now, when you started, you were first focused on families who were trying to educate their children, but then you've pivoted and now you're financing the schools themselves. Can you talk about that evolution?
Okay, so first of all, we are focusing to have our acquiring channel is focused to get the partnership with all the education institutions. So meaning right now we already achieving more than 150 education institutions that we are partnering already. So we having a good communication with them, so we know exactly what kind of like their need, what kind of like the problems that they're facing right now, and also related with the pandemic, because they cannot we cannot give the loans for everyone's, right? Because we need to skip do the underwriting. We need to see if the students can do can pay the installments or not. But the school itself, because everyone is get the impact of this pandemic, so they need to give installment for every students in higher educations. So how we tackle that? So we know that the school itself is already giving the installments to the students. So we kind of like need to help the education institutions, because previously they are get the payments upfront. Now they need to get it in installments. First, they're not good in collection. They're education institution. They're not a collections company, right? And then of course there's some expense need to pay upfront. So they need to also manage their cash flow. So by having the relationship with all the education institutions, we understand their problems. We understand actually how is their spending behavior on the education institution. That's how we tailor the suitable products for the education institutions that can tackle this this current issue to the education institutions.
Now, on the one hand, you can finance the school with a lot of knowledge because you also are financing the parents, but in the middle of a pandemic, it strikes me as you're sort of doubling up the risk. If the parents have problems, the schools could have problems. How have you managed risk through this period?
Okay, so first of all, of course, we kind of like tighten all the scoring criteria. We kind of like more selective right now, and then also we kind of like asking for usually for the school sites we want to applying the platforms software platforms that can actually gathering the school's data directly. So and then we also lowering the kind of like loan to value that we give to the schools itself. So meaning that we don't want to giving them leverage too much, so they can still have the more free cash flow. So we have kind of like some more buffer in terms of giving the loans to the school itself. For the parent itself, we increasing the scoring criteria, and then we also increasing we also lowering down the loan to value. So meaning we kind of like asking them to jointly financing their education as well with us also giving them the loans. So that's kind of like how we tackle that.
Now, I apologize to the audience. I think the chat function is not working well, so we're not getting and the questions aren't coming through. So I'm going to just keep going. Yesterday in London, we saw the first person to receive a COVID vaccine, and there's a lot of optimism that over the next several months, maybe the next year, it'll take some time, but vaccines will get rolled out around the world. Let me start with you, Tommy. What does your world look like post-COVID?
Okay, so first of all, also on the education sector, it's going to get digital. Right now, what we're doing right now is also helping many schools to financing their digital transformation in the school itself, and also for the parents and the students, they need to have the digital platforms to access the online learnings. So I believe in the education sector in Indonesia is going to be maybe not, of course, not 100%. The students still really like to come into the school, meeting their friends, and also all the interacting is also still really important in the education process. But I believe that kind of like increasing significantly the online parts in the education sides, and also I will see the edutech, like all the online learnings and also softwares for the schools to managing their school, to managing their data, to managing to managing the administration, of course, also in the schools, is also going to be increasing significantly.
And Jaime, how about you? What does the future look like for you?
We experienced some unexpected growth at the in the middle of this whole pandemic, and so for us, I agree with Tommy as well, and I did touch upon it earlier. There is going to be that shift in digital that we have to really anticipate, and we're already kind of taking the steps towards that to make our user experience and even our internal processes just a lot smoother and more robust. As a fintech company, we have to obviously be mindful of credit as we continue to grow, as well as have the adequate lending capital to really meet the demands of our business. So a lot of the fundraising things are issues that we constantly think about, even heading into next year and beyond. But ultimately, we want to go beyond just being known as a lender and pure wage access. I think that is, as a core product, it's fantastic and completely relevant for the times. But at the same time, we want to build out a more holistic financial platform to really, again, enhance the user experience and for Advance to make a deeper thrust into financial inclusion here in the Philippines. At the end of the day, it was really such an unforgiving year with this pandemic. I feel actually very fortunate as a founder to be thinking about things like growth and the future versus being so kind of worried about survival. And why I'm so excited about the future is really, I would say, a big credit to my team, who, even though I haven't seen them in 10 months, I mean, we've been so resilient throughout this time. I think even the support of our investors have been fantastic. And so the future of Advance looks bright, and a lot of it really will kind of transcend onto onto our platform and a deeper thrust in mobile.
So we just have 2 minutes left. A quick question for each of you as we wrap up. What advice would you give to someone who's a founder of an early stage inclusive fintech? Tommy, let me start with you.
Okay, so I think maybe I will give kind of like the advice, especially for new founders in Indonesia itself. I think because Indonesia itself, we have so many opportunity, I would say, in terms of financial access. It's not only here in education is one access. There's also in many sectors, in agriculture, in the fishery, also in the human resource. So in many access, in many specific sectors, when we see the financial access, financial inclusiveness is a really big problem in Indonesia. So I think. And this kind of like an implementation of the technology can help so much. We know that can help so much to give this solution for the financial inclusive access. And with this pandemic, I'm not saying that we kind of like get the benefit of it, but this pandemic is increasingly the use of technology for every person, right? So it's kind of like giving the more opportunity, also we giving more data as well for all the entrepreneurs who want to solve the problems in financial inclusions using the technology itself. So I'm really pushing all people, especially in Indonesia and all the emerging country, to also looking on using the technology, how we can solve the financial inclusions. When we see actually the technology adoptions in all the emerging market is increasingly significantly right now.
And Jaime, we only have 30 seconds, but you get the final word.
Yeah, I was going to say, to keep it general, I would suggest don't go into this without a co-founder. I mean, I don't think I would have been it's such a difficult journey as it is, and it's going to be lonely at the top. So I would strongly encourage that any new founder who has a great idea, especially with, as Michael mentioned, the silver linings of this pandemic, find that niche, find that opportunity, but try not to go in it alone. Have a strong founding team with you.
Tommy, Jamie,
Agreed.
congratulations on what you've done, and thank you. That was a great discussion, and back to the festival.
Thank you, guys.
Thanks for having us, Michael.
A very big thank you to Tommy, Jamie, and Michael.